Okay, so here's this week's portfolio. We've got 80% in the US and 20% in foreign. And in the Morningstar style box, we've got 97% are large cap stocks and 39% are considered value, and 47% are core and 11% growth. Going down here to the sector split up, we have our portfolio versus the S&P 500 right here, and we see that we're significantly underweight on cyclical sectors, and this is mostly coming out of the consumer cyclical. Looks like our sensitive sectors are pretty much in line, although we're underweight on industrials and technology, but overweight on energy. And the majority of the weight in our portfolio is in the defensive sectors, specifically healthcare, and that's where we have more than double of the S&P 500's weight in that sector. And so our top three sectors are the energy, technology, and healthcare. And those three together make up about 68% of our portfolio. So let's go down to some key ratios here. We see that our prospective PE ratio is about 14, and our price to book ratio is about 2.43, and both of those are 84% of the S&P 500. So we're buying the earnings and the net assets for a little bit cheaper than the S&P 500. Our return on assets is estimated to be 6.91, which is 76% of the S&P 500's, and our return on equity is 26.8, and right in line with the S&P. And our 5-year earnings per share growth rate is about 8%, and that's about 77% of the S&P 500's. So not as much growth as the S&P 500, but our dividend yield is about 52%, higher than that of the S&P 500 at 2.66%. And our market cap is 107 billion on average, and that's about 6% larger than the S&P 500. Let's go down to our top 5 holdings. We have Total, Cigna, Intel, Medtronic, and United Healthcare. And so we see that most of these are healthcare related companies, and technology, Intel, and then energy. And those were our top 3 sectors as well.